We've got a great list for you all today. The company that's behind OpenAI's new ChatGPT. We've got a company that's paying out over 9% dividend yield, and all of these companies have very good prospects on future growth, and they've got things brewing in their company that have yet to be reflected by the share price and their financials. This means that you can get these stocks at bargain prices. All of our companies today have solid balance sheets and little to no debt. So interest rate hikes and all the Fed's effect have zero to no effect on the company's ability to expand their business and capitalize any new opportunities while they leave their competitors in the dust. Stay tuned as we go over the top 5 growth stocks that also pay us a dividend, working up to the last company on our list, paying out a 9.52% dividend yield. And I'm quite sure it's a company that many of you haven't heard of. Now, on November 30th, 2022, the world changed forever. Artificial intelligence became accessible to the public for free through a tool called ChatGPT. GPT stands for Generative Pre-trained Transformer. Basically, it's a robot that you can talk to and that generates practically anything that you ask based on the wide variety of information on the internet. It went from a 0 to 1 million users in just 5 days, faster than any other platform. It took Facebook 2 years, Instagram 2 years, Pinterest 4 months just to reach 1 million users. If you haven't heard of ChatGPT yet and all the crazy new things that OpenAI has done in recent years, where have you been? I've been researching ways to invest in AI, and it turns out that Microsoft, yes, Microsoft, ticker symbol MSFT, is behind the supercomputing of ChatGPT and many of other OpenAI.com services. Microsoft has also invested $1 billion in OpenAI.com. So yes, investing in Microsoft will get us direct exposure and potential profit and growth in the AI space. Additionally, Microsoft has a phenomenal balance sheet. It is one of only 2 publicly traded US stocks that gets a perfect AAA credit rating on their debt. But Microsoft has been under a lot of pressure lately due to the fact that it is in many index funds. And while the index funds see market-wide sell-offs due to recession fears, Microsoft has been getting hit badly. But this doesn't change the fact that Microsoft has strong financials and may be undervalued right now. With $22 billion in cash reserves and only $3 billion in debt, they're in a great position to weather whatever storm and take advantage of the AI boom with plenty of money to push the envelope even further. Analysts project that there's a 7% revenue expansion for 2023, and it'll accelerate to 13% in 2024. While their dividend is quite low at 1.14%, it actually started off at just 16 cents in 2003 and has grown all the way to $2.72 in the short 20 years. So it shows that this company is willing to share its profits with its shareholders as it plows through the future. Next on our list, we have a Texas Roadhouse, ticker symbol TXRH. Yes, it's that Texas Roadhouse. You may be thinking that Texas Roadhouse is a bit risky, seeing that it is a restaurant chain. And with the trend of people choosing healthier choices and trying to limit the amount of red meat that they eat, Texas Roadhouse is one of those stocks that definitely defies expectations on all fronts, and its growth story cannot be denied. Now, I've been to Texas Roadhouse, and it's probably the busiest chain restaurant here in Central Texas, and by far the best chain restaurant I have ever been to. From fried catfish to great steaks that you can choose from behind the window, Texas Roadhouse is on my personal short list of restaurants that I actually want to go to. Their revenue is also forecasted to grow 16% this year and another 10% in 2023. Its shares are up by over 11% on a year-to-year basis, and there are more than 600 restaurants worldwide. There's still ample room for this chain to keep growing as it continues to connect and grow despite what's going on in the economy and with people's preferences for health food. Texas Roadhouse, ticker symbol TXRH, currently pays a 1.97% dividend yield. If you like these kinds of videos and want us to find different stocks for your investment portfolio, be sure to leave us a comment down below. Remember, we still have our top pick today coming in after these two companies that pay out a huge 9.5% dividend yield, so stay tuned. Also, all the names on this list can be invested in for just $5 if you use Webull and their fractional share purchase program. So with just $25, you can get all 5 companies in today's list and start earning dividend income right away. Next on our list, we have CF Industries, ticker symbol CF. Now, CF Industries is one of the largest producers of agricultural chemicals in the world. But the reason why they're on this list is because they produce nitrogen-based fertilizers. The problems with the war in Ukraine has caused farmers to need as much fertilizer as the crop can take to increase yield productions to meet the needs of the world. In 2022, CF Industries revenue grew more than 70% and will likely see their revenue only to continue to grow as crops become more and more precious. Currently, this company has no debt and over $2 billion in cash and is amongst the most cost-advantaged, efficient, and flexible companies in the world. They have unparalleled storage, transportation, and a distribution network in America. Its 3,000 employees focus on safe and reliable operations, environmental stewardship, and disciplined capital and corporate management, driving a strategy to leverage and sustainably grow the world's most advanced hydrogen and nitrogen platform to serve its customers. CF also pays a 1.95% dividend yield. So if you wanted to invest in fertilizer or in commodities, this might be a great place to start as there's continued expected growth, and also we've got that nice dividend coming in as well. Coming up on number 2 on our list, we have Helmerich & Payne, ticker symbol HP, not to be confused with Hewlett-Packard, which is HPQ. HP is actually an oil drilling service provider, and they represent a lot of companies in the oil patch. 2022, with the rise of energy prices, this company has been a great success. But this company is not just about 2022 and the high cost of oil. This company's growth is expected to continue through 2023 and 2024 based on 250 rigs that work globally, and they have no debt. Founded in 1920, the company designs, fabricates, and operates high-performance drilling rigs in conventional and unconventional plays around the world. HP also develops and implements advanced automation, directional drilling, and survey management technologies. So if you believe that we are still going to need oil, which I personally do, HP may be a great place to invest your money to take advantage of the rising demand for oil and the need for better and more efficient drilling protocols. Currently, HP pays a 2.17% dividend yield. Now on to our number 1 top paying dividend on our list today, paying 9.52% dividend yield, SQM. Though many investors may not have heard of SQM before 2022, this is the year that the under-the-radar company has risen to international prominence. SQM is a global company that develops and produces diverse products for several industries which they deem essential for human progress, such as health, nutrition, renewable energy, technology through innovation, and technology development. But what makes them a company of interest today is they hold the leading world position in lithium markets. SQM is a lithium miner based in South America. This year, the company is expected to have a 270% top line growth rate, thanks to both rising prices and rising demand for lithium. While there are risks as this being an international stock, it has been paying dividends for quite a while, and their current dividend yield is 9.52%. Now, based on the predictions of the lithium supply towards 2025, there may be a huge supply coming to market of lithium, which could drag down the price and hurt profits of SQM. But demand is said also to increase due to the turnaround in the economy. So while this stock may not do well in the coming months, it will be one of those stocks to hold on to for the future. And definitely with its 9.5% dividend yield, it is a great buy and hold strategy to boost your not only income, but also the growth potential of the lithium market and everything else that SQM makes. This completes our top 5 stock list. For more dividend stocks, be sure to click the playlist for our dividend paying stocks, and also if you want to learn how investors are investing, be sure to check out these lists as we go over Jim Cramer's list or Warren Buffett's. We'll see you there.